Good morning, class. Welcome to Homeroom with Unc and Market Monk.
Morning, P. How's your week?
Um, One of those weeks, kind of never know with the whole earnings casino thing, but yeah, I had one that went real huge there, so it sort of just got my week settled for me, and I just went pretty light after that. This SWKS. I was actually looking upside there, but then your post indicated that it could fall pretty far, and so I did the 2 and 1. I did the put closer expiration, which made it go up more when the move happened. So that dropped about 30%, and yeah, that'll kind of make your week. Other than that, just a lot of maintenance. I had some pretty good entries on AVGO and a couple other things on that kind of initial big move down with the Chinese AI stuff. So I'm just kind of maintaining those, trimming off a bit, and had some smalls do well, Piton, and a few others. So good week for me overall.
Yeah, I did. I wasn't planning on doing too much this week. I definitely had some focuses on if my level hits this week, grab some more shares here, and then a few that I just thought were going against the grain. BBAI turned out really good. Um, I don't think I managed that one as well as I did SMCI, which did a little better, at least on my end. It it's a really easy market when everything is failing or everything is going up, and you can kind of see what's going against the grain. Um, or excuse me, when everything's going down or staying flat, and you can kind of see something still grinding up. It's that when everything's going up for me, it's harder. And I think I've said that a few times. So um,
That's absolutely true for me too.
yeah,
Yeah, BBAI had some definite urgency to it, and I um, I try not to overuse that word. So when I put it in there, it has some usually has some meaning. It's just I see they they put. I mean, I don't know, whales position all the time for things to go up, but you can see, okay, they need this to go up soon for this to work at all, or they're going to have to reposition. So yeah, so that's how that one worked, and this may be, I don't know, our third, fourth, fifth round with BBAI, but it's been a good one for us.
yeah, it's just like for me, but that chart's just pick a spot and see how it reacts. And I mean, that's kind of the key to my levels is watching the consolidation of the stock, and then checking with you and just kind of like I always call it health, but some stocks I don't know how to say it, but healthy, strong, whatever the word may be. When you go into the pullback market, I think it stands out a little easier. And also scalping nuclear kind of been that way. And then the news plays as always, like with the weed and stuff this week. Um, yeah. I mean, it's a little easier for me on the. I hate to say it because we've been like a month of not talking about, but more of on the short term trades or day trades. Those have been really easy. It's the finding the actual bottom of the pullback that's a little harder in this current market for me. But you just don't plant your flag, and you can usually, I guess, get away with it, so to speak, if you're just patient. And you get into that position that I always talk about, like would you rather have a good entry or a full position on an average entry? And then a DCA kind of gets you the good position, but you might not be full when it actually does start to move.
Uh, yeah, absolutely, and there's, I mean, sort of in the option world, the pop and fade is still the dominant paradigm right now. Just as an example, MSTR on Friday been trading off 334, um, popped up 5%, closed the day flat or red. That's pretty common. That one's a little more extreme with that kind of thing, but you get a lot of them in these bigger tech stocks that they might move up 3.5% early in the day, and by the time you get to close, it's 1.8%. Now, if you're holding shares, who cares? But when you're the people trading options, um, even with a good entry, so something moves up from 0 to 3.4%, closes down 1.8%. Depending on the options people bought, they might actually be red on that, even though the stock's still up almost 2%. And so these conditions are just eating people alive who try to swing short expiration options. Absolute worst thing you could be trying to do right now. But I mean, it's what they do. I tweeted out, that I think the people who use the term dry powder are referring to like $200 that they have left in
Sure.
settled funds. So like, that those kind of people like are really going to get eaten alive at the moment. And so you just keep seeing that.
Yeah, I'd go trade meme coins, I guess. I mean,
Yeah,
that's where you
yeah.
end up. So, um,
Yeah.
I just the more I do this, I guess not the less patience I have, but the less time I have for um, hurting people. I don't know how else to say it, but we're all going to be swing traders in the
Yeah.
long run, and I know it's hard when you're starting off and you
Right.
only have. I mean, in perception, some people, they only have 2 grand, and some people probably have 30, and they both feel broke. But whether you're in either situation, you probably still need to have a way to fund your account, and you probably should be taking the majority of your account on a longer term view, and then you really just need to learn how to take profit. I mean, that's the key. Close every trade green. Tell me when you're red. Comes back into play, um, and you just don't see that with anybody on Twitter. It's again, I use it for what not to trade, but I mean, even the ones that kind of look like they know what they're doing, they're nothing like that. You either get $100 to a million challenge, or you get 200% on a 2 cent to 4 cent, or whatever the hell it's 6 cent, $6
Yeah. I
play.
was posting some of those.
Yeah,
Yeah.
I mean that's all you get over there. It's just like, man,
Right.
we're gonna not we, but the proverbial we is the humans are gonna just turn off so many people to investing, and that's like the last thing I ever wanted to do. So I get sad in these situations because there's a lot of good stuff, there's a lot of good things you could do right now, and meme coins, ODTs, and are just not it. Calling the top, that's not it either.
No. So you had mentioned early in the week you wanted to ask me about the 10-year and kind of the
Oh yeah,
pullback.
because I seen it on the news and it looked like it was going down, and they were talking about it, and that always just sounds like gibberish to me. So I just posted in the group like, yeah, I better talk. We better talk about that this weekend.
Yeah. So I think to me it's I don't really see the correlation between okay the 10 years going down, market's going to go to the moon, but when it's really kind of like just roaring higher and higher, it's really hard. It seems really hard for the market to sustain any gains. Like it has that 3 days down, 2 days up, and then you might end up on the week. Like the 2 days up might be really good, but just a sustained stretch of upside gets more difficult when it kind of pulls back like this and the pressure's off. Stocks can run a little longer, um, and it might relieve some of those kind of pop and fade conditions I talk about, and that advice I give of just or that perspective, don't chase calls, don't chase puts. I mean, a lot of that. This is one of the things I look at, and then you can see it on Friday. It did move back up. Part of that I think was this is I think what 2 Fridays in a row where the algos fired up when Trump
Mm-hmm.
started talking tariff. So I think you have to put that into take that into account as well. And a lot of times the market will then kind of settle down. But I'm still the stuff I look for. Like when I wake up at like 4 a.m., 5 a.m., and I'm looking at what's going on and what's moving and things like that. Um, I like the big overreactions, and or even kind of small overreactions, depending on the stock. But I'd rather buy something that's red pre-market than
Sure.
green and looking for that next leg up. Because even if, okay, I'm just gonna buy the first pullback, um, it can just give it all back, and so you just got to, if you don't have a pivot, I mean that's number one. If there's a pivot and then pre-market movement, and the easiest trade to the upside is pre-market down, and then it kind of finds some equilibrium, and then you can get out or you can keep some, whatever. But yeah, the 10-year. I mean, I'm not going to get too complicated with it. I just think that when it does pull back like this, um, some of the conditions I've been talking about do ease up a bit, so you might get some follow through to the upside.
Yeah.
And then, I mean, there's
Go
some
ahead.
names already doing, like Facebook, Crowd. I
Sure.
mean, they're hitting
Sure.
all-time highs. But I just mean like more of the broader market can sustain something from here.
Yeah, I mean, the market's definitely a little confused right now, and not hard to see why we have a president that. I watch Bill Maher. I'm a big Bill Maher guy. I've been watching that since the '90s, and he says like the stuff on Monday that I wanted to talk about on the show on Friday feels like 6 months ago. And I mean, he's not wrong. We had a trade war 2 weeks ago with Canada and Mexico. I ain't hearing nothing about that now. I mean, we've moved on to four things down the road. So just that instability from him, coupled with for me the the run we've had this great run, and the report card is coming out right now from all the ERs, and it's hard to exceed that run in your report. That's the best way to put it. And you hear it with like Nvidia or AMD or anything like that. The moves they had made or are making are trillions. So it's hard to hold that up, but you just look, you look for things that don't line up, so to speak. I was talking with Carlos on Friday, and like I can't. Oh, we were talking about Lumen, and I was like, well, let's just go read the report, because they had a big pre-market, pre-market spike, like 20%, and then just gave it all back right, right where it was, and it's like, well, yeah, but the report was
Yeah.
good, so you just get a rotation of sellers and buyers, and for me, that's the best play right now. I mean, I know you do the casino; it's more of a pre report thing because you're playing both sides. But I mean, I look for the stuff that
Yeah.
that has just died after the report, and then I will read the report, and it's like, well, this is in line, or they even beat a little bit, or everything's good. Guidance to me is I want guidance to drag it down as long as it's not like we're filing bankruptcy. If you're just gonna fire some employees, I'm buying.
Yeah.
I'm buying. That you fire 7,000 people and give me that seat. I'm in. Um, and that's just kind of how I feel about the,
Right.
the,
Right.
the current ER model. Because again, they have to beat this run.
Mhm.
They have to exceed the run that we've been on.
And you do get the ones. I got pins called up here, and that it's just getting back to where it was. And so
Yeah.
you do see if if someone's last ER was bad, and snow was the same way, that it's bad. It was bad. It consolidates, and then you have a chance at that point to go higher. But pins, I mean, that was a big win to the upside. Even if this had fallen, it wasn't going to fall to $21 or something. So I think it was still going to be somewhere within this box, 28 or something like that. And then you kind of look to buy it from there. There's a reason that when I do those ER trades, that the calls tend to have a lot more time, depending on the setup, because they often, not only like if it falls, I start to look to scale in on a new trade, but even that stupid option I bought for that, a lot of times those have been recovering if you give it a couple months, and it might even get back to where it started with ER and then bust out much higher, and um, that's been something that's been happening. I noticed the past, I don't know, 18 months or something like that. Even a lot of these big moves down on earnings, simply simply don't last. And there's a couple that had ER this week I didn't even touch, and I just want to mention this one just because it always kind of comes to mind. Um, Long time ago on net, I mean, we were back in the $50 area, and someone was like, "Well, what if there's a recession?" And like, like I had this whole thing about flow. You had the TA, and then this kind of like macro take comes in. What about a recession? Well, okay, net's now $160, and like a lot of these, we talked about when it was down here. We talked about this drop here, and it's like someday it's gonna get into the middle of this area, and then depending on what happens, some of them are going to go to all time highs, some not. Net has a better shot at that than Zoom or even Twillo, or some of the ones that went really crazy. Net can kind of justify being up here a little more to me, but this is where we are, and this was a multi-year thesis. But I can't buy net up here. I'm just managing what I have at this point, so I didn't even bother trading it into earnings. But the stuff I bring this up not just like as a victory lap, but a lot of the stuff that we talk about now, whether it's oil or steel or whatever, it's the longer term trade. Like we're looking at this for the way it can break into some of these upper levels, and it's stuff you can keep for a long time. So when I say don't start over every day, part of it is buying stuff like net when it was under $70 and keeping some, and it definitely helps your account out a lot. I got smacked on elf, but it didn't really matter to me that much because of what some of
Yeah.
these other ones did. But that's kind of my biggest lesson for people. We've been at this long enough now. It's like, here's the work, and it didn't come out of nowhere. We talked about this happening already, and so as we work now, 2 years from now, we're looking for moves within those other sectors too.
Yeah, I have some net, not a lot. Um, I forgot why I got 4 lines on that chart, so I'm assuming we talked about it a lot because I had to put a purple line at 96 for you at some point in time, um,
Yeah.
because of and a third line at 84. Um, yeah, I don't know where I was going with that, so I'm gonna go to the other point. For me, sorry, for me, it's I do things a little different. I mean, I don't like to. I do try to keep it, as we say, like freshman a little bit. But in general, I mean, if you're a new guy, I think it would help you to kind of, even if you only had a couple shares of this when we were talking about it, and you do that in multiple things, and if they come back around, you add to that position. But um, it's for me, it's managing the taxes because you're leaving some in, and then you have to pay taxes on your gains that you got off the stock. So it's a little bit more math for me on my end. But just if you're starting out, if you only have like 3 or 4 shares or something like this, that's good. You need to get 3 or 4 shares of like 30 things, and that's going to be your base account. And like you're saying, it's going to grow, and you're going to, I talked about it last week, like you're going to wake up some days and you're be like, oh, my main account's doing good, and it's going to just feel like you're on the right path of building brick by brick. And um, not having 100 shares, who cares? I mean, I would rather have 3 shares of 100 things than 100 shares of 3 things if that's all I have. It's all I have. I haven't talked about it too much, but I have an account that I got from when my grandma died last year, and it's full of like some bullshit ETFs, but it doesn't move much, no matter the weather. It doesn't. It kicks back some dividends every three months. It does that, but so far it just hasn't really moved much at all. And it's like
Mm.
$100 up, $20 down, $20 down, $100 up, and it's just like slow and grindy. So like building that for yourself along the way. I mean, I understand. Yeah, well, I'm going to lose some capital. Well, hopefully that capital is some of that capital is profit. We get to that free share thing. That's why I preach that so much, because we're not just 2 steps forward, 1 step back, and again, you're going to feel like you kept a victory in your pocket. I mean, I stress that a lot, and I think you've done a good job. There's no way you have 100 shares of Microsoft. You were talking about buying fractional back in the day, and that's
Yeah,
just
and
that's what you have to
yeah,
do. Go ahead, B.
right. Yeah, and on that note, I mean the so the fractional buys. The first stock I did that with was LLY, because it was $600 something, and it's like, I don't want to buy. I don't want to spend $600 every time I want to buy this.
Or
So
1,800
I
for the
started
three
doing
shares I'm talking about. I mean, yeah, just even that,
Yeah,
1,800
exactly.
bucks. I mean,
Right,
yeah,
right. So you build that, over time, and it adds up. It's the treat it like a bill stuff,
yes,
and so this folder here, which I've shared before, my DCA dumpster, which I need to update some of these, but a lot of these, like, I kind of buy sort of indiscriminately as we move into different sectors. There's a lot of weed on here and stuff like that, and you can see they've had some bad days. Still significantly up on a lot of these. Like Twillo's been one. I've been buying since those lines you see there, and over time it adds up, and that really, I don't even buy. I might not even buy full shares. I don't know if we'll take one here, like
W.
W, right. Um, Maybe I'll just put $20 in it. My account lets me do that. And I mean, who cares? I'm just, I'm building over time. I don't really care how many shares I have. I call it the DCA dumpster, because they all, when I put them in here, they all drop to a level where it's like, okay, this $100 stock.
Yeah.
It just is.
Yep.
And so I just keep at that. I stay on them, and what funds that for me, I teach extra courses here and there. A lot of it comes from, like, if I do well in options trades, like, I'll just put that into this, like half of it,
Nah, it's
and
it's
that's,
Discord subs, P.
yeah, there you go. Yeah.
Sorry.
I put Carlos. I put yours in Walgreens every time. So just so you know, I buy 2 shares of Walgreens every time Carlos
Subs.
pays up. But
Appreciate you, Carlos, for your 2 shared contribution. Shit.
yeah.
Sorry. I'm sorry.
But yeah, I mean, so yeah, I just and when I said starting over every day sucks, and the reason I harp on that so much is that I did that. When we were starting out,
Oh yeah.
and I was finding all this great stuff, and, like, I wasn't getting the full move off of it. I would like, hey, I got this great setup. I trade it, goes up 7%. I had a option day trade. Hell yeah, cash it out. I'm good. And then the thing goes up 30% in the next 2 weeks. And I don't have any of it. And I found it. I knew it was going to go there, but I didn't have any of it because I wasn't buying shares, and I just move quickly on the options like you have to, and I got sick of doing that. So yeah, so I mean, that was a big change for me. Still something I'm working on, but that's why I think you have to do that if you really want to make it long term, and any endeavor is like that.
Sure.
My professional life is like that too. I talk to grad students all the time, and it's like you get to a point, yes, you write strong essays. I think you'd be a good teacher, all of that, but you got to get serious. You got to professionalize. You have to take these steps, do these things if you want to actually, make it in this profession. Otherwise, go work in a bookstore and share all your knowledge there. Nothing wrong with that. Go do that. But if you want to be a professor, very hard to get into that field. Job market sucks, all that stuff. But you want to go for that, this is what you have to do. And trading is the same way. If you want to dick around and trade 0 DTE, have a good week, have a bad week, try to make it back on the weekend, betting on sports. I mean, you can do that, but you're just going to be kind of spinning your wheels. You're not going to really get anywhere. So if you want to build learn sectors, learn rotations, simplify TA like we do, add flow into it, and start to build something. And that's my biggest lesson, kind of from my own experience.
You kind of I didn't know how I was gonna get this one in that I wrote down. I've been trying to write stuff down when I think of it a little bit more. Um, but I can fit it in here because it fits. But you talk about taking it serious. When we started this group, we both wrote like little, "Hi, this is me. This is what you do" thing. They're pinned in my group. I'm sure they're still pinned in your page. Mine a big part of it. Don't eat Cheetos and your vape pen. Leave that away from your desk. But this week I wrote down. I don't even listen to music. Um, when I'm doing research and stuff because I don't want the song that I like to make me like a stock. And I know it sounds a little funny, but that's how serious I am. I mean, I'm that serious. Like it's little things. You need to focus or don't waste your don't like. I won't come to the screen on Friday. Sometimes I come at right after dinner. Sometimes I need an hour break until I can focus on what I'm doing. And you have to take it serious. You have to take it. I mean, it's your money. Um, yeah. So I mean, even the little things like if you think it's fun and you got the strobe lights going like they do on their videos, and and you got your vape pen out and your Cheetos, like I've always said, it's just you're not taking it serious. You think it's a game, and you will treat it like gambling, and it's just not going to end well. 90% of traders fail. They say that for a reason. Um, no matter the time, I mean, on the opposite end though, no matter the time you have, if you use that seriously and focused, you'll be okay. Um, Especially if you use us as guidance a little bit and you make it through the big thing, P, is I think if you make it through a few seasons, and I don't mean winter, fall, and summer, I mean bull market, bear market, stuff like that. A couple times you make it through a couple of those seasons of change, which we started in when we started in the other room, it was late bull cycle. We started this room just at the start of the down cycle, and we are back into an up cycle again. So we're 3 seasons since we've known each other, and just to give people a time frame of when I say seasons. If you can make it through that, um, even the first one or two, you're going to start seeing the sector rotation. You're going to see names come back, and every time you see something, it's like the baseball analogy. The first time you see a fastball, you're like, "What the fuck is that?" It just goes by, and after a 2-year career, the fastball might be your pitch.
Definitely. The wanted to Before I get into the boring stuff, I wanted to talk about a um, policy issue that I think could have some relevance.
Can I say my one note to you just in
You
case
ever
that
heard of the? Oh yeah, go ahead. Go ahead. Yeah.
so um what I really want to know what we want when it comes to eliminating government waste. All right, go ahead.
Yeah.
Sorry.
So you've heard of the CFPB, Consumer Finance Protection Bureau,
Maybe.
and they've been under. So the White House is basically declining more funding
Everything.
for them, and it's one example of sort of easing regulations. Now, one way to spin it is like, oh, this agency that protects everyone is going to be gone, and rampant fraud and crime or whatever. Um, I mean, fine, yeah, maybe. I don't know. Sort of like I had my car broken into, and I call the police, and they fill out a form, and then that's the end of it. There's no like invest. They're not going to go find who did that or
They're
anything.
dusted for
But
prints.
so anyway,
They're out there dusting your door
right,
for
right.
prints.
Yeah. Okay. But more importantly for what we do, um, easing regulations like that, some of these small fintech kind of small cap people get more breathing room and can kind of operate. And it's not as if like they're just gonna like start all their crime or whatever. But it's a more favorable situation, and more importantly than that, it's perceived that it will be a more favorable situation, and since stocks look forward, that's what kind of moves them. So I think a lot of the names that we follow in the fintech sector that have been like kind of stalled and waiting around. I think they maybe were waiting for this. And so it's one of the things I'm looking at, flow wise. It's like, okay, show me the 2027 leaps that are 100% out of the money on the $16 stock. And that it's kind of like I've been at this long enough, sort of the flow I anticipate. So that's just one example of a sector that I think could benefit. Some of the goofier stuff like psychedelics. Remember Mind Medicine,
Yep.
that one I found
Hmm.
that took off. There's other stocks in that sector
Yeah, there's a few.
that kind of haven't been found yet. So I kind of look there, and so to me, that's how you read an administration is what's going to be the perception on who's gonna benefit for this, and then the flow comes in, and then we go from there. So that was just my one example of that.
Well, deregulation in general doesn't affect the individual. It's the private and public sector businesses that it affects. I mean,
Yeah.
that's who those regulations are for. Not
Yep.
it just in through them we get benefits, so to speak, is what they say. I mean, yeah, you could use the CFP acronym you use. The EPA is going to be big. Um, yeah, just what yes, there'll be bad actors, but it also helps some people short term. Short term, I think. Um, that's really hard for me to decipher. And like back to the Bill Maher thing I talked about, man, is it a fast moving train. Um, Personally, I've always asked for kind of a government audit or a review or for me. I mean, we have like HUD housing, we have Section 8 housing, we have the housing vouchers, and we still have homeless people. So can we just get rid of that all and take that money and try something else? I mean, that's where I've always been in my head politically. So
Education's the same way.
yeah, well, my wife's
I
a
mean, it's
teacher.
like when
Is
people talk about,
Go ahead, go ahead,
yeah, yeah,
go
yeah.
ahead.
I mean, when people talk about, free college and all that, I mean, if you just sort of think about it, and a lot of times the like local solutions work really well. Like if you go to the school district where the college I teach is, and you graduate high school and you have a 3.0, you get free tuition. You get 2 years free tuition at the community college,
Wow.
and a lot of really good students opt for that, and then move on to a 4 year after that. If instead of that you have this big bloated student loan thing, and then the colleges are pushing students to take 15, 18 credit hours more than they can take, and then they don't do well, and then they end up with 20 grand in debt at a junior college, and that they didn't get make it anywhere. I mean, that's not working. And so yeah, I do think that kind of reallocating and revamping things certainly is beneficial. And then for what we do, who's going to actually benefit from that? I think that's what we try to tease out of it.
Yeah, the education one, I mean, it's not huge in the stock implication, but it's huge in the process of the
Yeah.
thing. So you can see things that will be huge in the implication, like the EPA. That will be huge. But me and my wife had to sit down and talk about it because she was like, "Yeah, I don't know," and um, through a long conversation, save you guys some fucking time. Like we came to the conclusion together that the Department of Education basically just distributes money. They don't set any like classroom regulation. They don't like send textbooks to anybody. They just distribute money. And in our state, what we put in, we don't even get back. So we're like, if we didn't have the Department of Education, our state would have more money. It would shit on states like Mississippi and Arkansas and probably Oklahoma, who do
Yeah.
not come out
Yes, yes.
who do not come out positive in that situation. Um, but again, what are they doing? And when it comes down to it, they're not doing anything except for making you meet a requirement for funds, and then they distribute those funds. That's it. That's it. They're not giving lunches out or anything
Yeah.
like that. It's so I mean when you look at a lot of that stuff, could it be better? Yes. Are we and more importantly, are we getting what we're paying for? And a lot of things we just haven't been for years. Um, So yeah, I'm looking forward to I mean, it all sounds good, right? Department of Education and USA Aid sounded great until they got into it. Like, we're just sending tents and food to people. Well, it's not looking like that. And even the Department of Treasury stuff, where you kind of have to have that. But I read $1 trillion of missed payments, or not missed payments, but payments going to places that they weren't supposed to. Like they sent it to the wrong address. And I'm just assuming if you do that in another country, especially South America, African country, you're probably not getting that money back if you just send it to somebody's random account. It's probably not coming back to you. So
Right. Yeah. No,
um,
absolutely. Yeah.
it's something that's needed. But currently, what you want with a new administration and why it was so good when Biden first came kind of started the turnaround. To be honest, um, you want them to champion something, and cutting funding that
Yeah.
probably is going to affect a ton of things. I mean, that's just money in the market. Isn't necessarily bullish in my opinion. So I hope they get on something eventually. Um, I hope it's oil and gold and silver and stuff like that versus um, what's today and what are we bitching about.
Right. No, absolutely. And I mean, any large organization or even small organization, like over time, the way that these organizations spend money, things creep in that like you don't need or that don't make sense, and it can go on for years until you actually take a look at it. And I mean, even I'm in faculty senate, and we had things we were spending money on. We had like a subscription to this voice dictation software, and I'm like, well, we're paying for this for the whole year. We meet 3 times a year. Why are we paying for this for the whole year? Doesn't make any sense at all. So you move that to monthly or whatever. But yeah, and I don't know if Elon's team of teenagers going through and interviewing federal workers like is really the best way to do it or anything like that. But I think it definitely it kind of shakes things up, and I agree with you that you got to move to a point where you're doing something positive. And I think infrastructure probably is going to be it. And on that note, I can move us to copper if you want.
Yeah, let's do that.
But
Good transition.
copper doing exactly what I kind of hoped it would. I mentioned this $4 line. I was like, I don't really want to revisit that, so let's just see it at 420s and see what happens. And it did that. So potentially gonna try to make a move to $5. We'll see if it maybe rejects up here at 475 again. But while it's in the process of doing this, the stocks themselves are really benefiting from that. And so copper and aluminum, I'd pair those together. Steel, I think, is still waiting on this U.S. Steel issue
Yes.
to resolve. But I'm pretty bullish long term on steel. And if you want to avoid the X thing, there's other names,
CLF.
and definitely can. Yeah. You definitely can get in on those, and something like CLF. I think just under just normal conditions is going to go up like 30%. So
Sure.
if we get some crazy bull run, you're talking 50, 60 plus. But yeah, just really good ad zone for that. So I'm pleased there. Gold and silver. Gold, I don't know. It was my big thesis at the beginning of the year, and here we go, still going.
I'm waiting
You
for
see
you
this
to
gold
say.
weekly.
I'm waiting for you to say London bank run, because that's what I keep
Yeah.
reading about. Is the London gold bank
Yeah.
run
So the physical delivery of gold
of
is
paper
a big,
gold. Of paper gold.
or of paper gold. Yeah. I mean that's a big story out there. And you definitely there's some supply issues in gold and also silver. So that could be the thing that pushes the breakout into the 3000s. And
Crazy.
I don't know. That's part of what I just saw coming back then. Didn't know the reason or whatever. It was just about option positioning for me, and then just seeing the story begin to materialize. So I'm still I don't see this pulling back anytime soon. I certainly wouldn't try to short gold. I think that'd be a mistake. And then silver, 32 area is important. Still looking for a move to 36. But when you look at where we came from in silver, I mean, it's done really well, and a lot of opportunities in miners still there to me.
Yeah, I mean, you don't have the line on there. I'm surprised you don't. But that 26 flip, I can see it on the chart. Maybe I just look at charts a little different. But if you draw a line on 26 on the chart, yeah, you can kind of see the
Yeah,
flip,
yeah.
and that's what you talked about. I don't know how long ago, and that's just what I've been playing, kind of the bigger picture of it. But it's healthy. I mean, super super healthy, and not necessarily a lagger. It's just on its own story compared to gold, where gold's a little couple chapters ahead. I don't think you can do bad in either still. I still buy. I mean, I'm buying more silver than gold stocks just because I have more of them, but uh, the gold stocks are like when your entries usually don't come back on the gold stocks.
Hmm. And there's a couple good combo stocks too. And the one thing about mining stocks, you do want to look at what country do they operate
Yeah.
in, and a lot of times if they're all in on one country, depending on the country, that can be bad. And so you want to learn a little history, learn something about that government, or just don't put all your eggs in one basket. Spread them around. The miners who also are big, you know, facilitators, middlemen, like who are kind of involved in all those kind of steps. It's a little bit like oil. It's like investing in Exxon versus a pipeline company. Um, there's times I like both, but if I think oil is going to take off, I want some Exxon, I want some Chevron, I want some of those, and gold's no different. I mean, there's some of the bigger ones. Um, you want a piece of those, even though some of the small ones might have more upside percentage. They also might drop an offering on you and drop 15% overnight. So yeah, that's my only caution with that.
Yeah, well, you got another medal to say? Are
Um,
you gonna do another
oh
one?
yeah, well, real quick on uranium.
There you go.
Yeah, so uranium's still, the overall in this downtrend, and a lot of, I mean, the uranium stocks are moving on the AI story. When this finally hits a spot and reverses, I mean, I don't think we're going to get into the lower 60s or anything like that, but those could really take off, and the flow is positioned in a way that tells me that it's gonna head back to $80 or something like that, and then over the next maybe 3 or 4 months. So I'm mindful of that. These futures are not a day to day chart. They just we don't get minute chart updates on uranium. It's all behind closed doors. But yeah, I mean, this is kind of, to me, this kind of a controlled sell off, and when that flips, a lot of those stocks are going to take off, even though they've already done pretty well. They're in a nice range to trade, but that next leg up is going to really take this turning around, I think.
Yeah, I like the sector. Kind of partial to a name, just because it's respectful of what I do.
Yeah. Yep.
Um,
And then I wanted
go
to
ahead.
I had a question for
No.
you. Um,
Sorry.
now, yeah. So Bitcoin. I mean, first of all, I think we might be stuck here for a little while. I said 92 months ago, and uh, here we are. Here's 92. Keeps wicking down there. Um, it's going to break out of this range. Right now, I would say probably to the downside is probably where it's going to break. I don't swing short on stuff, but But that's just kind of how it's looking for me. But what I wanted to ask you is this idea of share accumulation, share distribution. When you hear those terms, does that connect at all with what you do and what you look at TA wise?
Well, that I mean that is it. The,
Yeah.
that's what our RTL is. I just look at it on multiple time frames to see when they were bought and where. Um, I don't know how that relates to Bitcoin. I mean, those aren't shares; those are actual. I mean, it's different. That's why it's so volatile. It's because it is. There's not like a. I mean, like Coin does. I'm assuming Coin can't and doesn't sit there and make the market with Bitcoin, or MSTR doesn't make the market. Bitcoin's more like it's more like physical gold. I hate to say it. I hate to make the comparison, but it really is. Um, but for me, yeah, no, I totally look at that's what volume profile is. P is looking at share distribution across multiple time frames. Um, what was the other word? Distribution or accumulation? Yeah, those are different.
Accumulation and
Distribution has already
distribution.
happened. Accumulation is something you do. I look for I
Yeah.
forgot the stock. But like, so when I do want to talk a little bit about offerings, but when a stock has an offering, they have to get those shares out there in a price range, and I look for that. They'll say it, and you look for that like SoFi when the CEO was buying. I look for that. But for the most part, it is post for me. I mean, I bitch about the Twitter guys that use maybe 3 months of information and they think they're volume profile experts. And it's like, you're not even looking at I have like a small white line for what you're looking at. And my other things are really big. And I auto plot those lines. I can go show you. I mean, this line right here is basically all they're looking at. There's one little line, right? And you can trade off that, and it's here too. It's on the smaller time frame, but I want bigger time frames. Spy's a shitty volume profile chart, but I want bigger time frames for volume profile, which is again the distribution of it. Yeah.
Connection to stocks that I'm making with these terms with the these ETFs and Bitcoin, um, I think have changed things a bit, and they make it the gold comparison is good because a lot of what happens in gold is the paper gold really is kind of in the in the driver's seat, and paper silver and they um, that's where and people talk about manipulation, and some of it's not that even that it's just actively manipulated, it's just the way that money circulates. And I posted something about the velocity of money in the research section, and that's kind of relevant here. Bitcoin, the moves used to be a little more pure, I guess would maybe be the term. It's just the buying of Bitcoin, creating all this pressure and everything. But the advent of all these derivatives and the derivatives for the derivatives and all of that stuff can park it in a zone for extended periods of time, and that I think is kind of what we're stuck in here, and it makes the stocks very difficult to trade up here because I mean this isn't. I keep mentioning 92. Is that support you would trust when you look at this chart?
No.
I mean, no, I don't think so.
No.
So definitely uh, create some kind of uncertainty. And so and the thing about retail trading is like there's a lot of people really all in on crypto still, and even though it's in a significant bullish market, it's not close to being enough for them, and they're bleeding out, losing money every day. They get impatient, and then they run to meme coins and stuff like that. But this, to me, is exactly what we thought the ETFs were going to do, and I think we're just um, seeing that play out. So their next big hope is the government buying a bunch of Bitcoin, which to me is even worse. But yeah, I mean, so I still think it's a sector that tradable, but I think you're kind of cool on it for a reason. And I mentioned earlier that not really swinging anything in crypto till Unk's buying. So we'll see how that plays out this
Yeah,
year
there's
as well.
Mara $17, Hodge 3. There's a ton of stuff on the levels right now, and I mean, if we were trading crypto, I would have probably had 5 of them in my notes this week. Um, I've
Yeah,
kind of followed the Venezuela thing a little bit, and they're moving away from it already. It just doesn't work. It does not work for that, and
mm,
that's kind of what I think you needed for Bitcoin to not necessarily stay around, but to have that like next leg up. Um, the charts,
well,
like
yeah. I mean, the
the
IMF says no. Like,
yeah, the minor charts
so
though,
the
they're
International Monetary Fund is not going to let people do that.
yeah, yeah. So the miners, I mean, the divergences is so much right now, and again, another group of stocks that fit that they've ran. Now what? Um, and I
Yeah.
just yeah, I just think we're pulling back even. I mean, Mara I think is going to be $7-8 again. I don't know where Bitcoin's going to be when we get there, but um, maybe I'll change my mind then. But the story's over for me for the most part. I mean, when the American Eagle gold coin comes out, I'll maybe revisit it. But until then, probably Ethereum's probably a better investment to me, just because there is somebody behind it. It's not just a wild willy nilly thing, and Bitcoin's just more like a nostalgia trading card at this point in time. Yeah, pet rock.
Good stuff.
You want to talk a little SPY? Oh no, let's talk offerings real quick. Let's take like 2 minutes on offerings.
Yeah. Let's do.
Offerings.
Oh, yeah. Go ahead.
Um,
Good.
post. You think we're gonna get a bunch of offerings? Think it's coming? I think it's coming.
Yeah, I do. I do. And I mean, it makes so much sense for some of these stocks to drop some offerings given the run they've had. Um, they have to, and I think it's a lot of opportunity, especially an offering that drops down to a level um, is great. There's going to be some stocks that I'll buy pre-market just based on those offerings. I just think you just kind of see it'll just the market it'll just churn through those shares and get right back to where it was. So
Yeah.
yeah, I do think we're going to see that.
You said the short of this long-winded thing I'm going to say, but I mean that's exactly what you look for. Is for me as opportunity, and it's almost like bringing extra chips to the table. Seeing how fast they get bought up, you just do the math on how much you offer in 100 million. You're a $10 stock, so it's a million shares. Or it's 10 million shares. How many days does it take to get that into the market? Is the market buying it up? So it kind of gives you that quick assessment on if there is a dump of shares. Um, is there the appetite to own that stock? And offerings really show it, for me. So taking a day or two after an offering and seeing if it holds and hopping in is never a bad idea, especially if you get a 10 to 15% drawback, just off that offering. So if it falls to a level and holds, yeah, even better. I mean, even better if you don't have to play a high or low.
Exactly. So I mean, I would recommend that people between their YOLOs, when we talk about offerings, look up what that is, read about it, read about dilution, like all of that kind of thing, because these are terms that show up in the Webull comments
Yeah.
when stocks go down and like all this, but understanding exactly what it is, why the market reacts the way it does, what allows it to to move back up, and some of the basic numbers and math behind it. And I say the same thing about market cap and float and and all of that. Just learning some basics there
Yes.
can really help out, I think.
Yeah, don't
So
don't go all in on it
uh,
like it's the one or two things you need to know, but it's just good information to have. And if as soon as you can quick check that, and you get an
yeah,
idea of, all right, this is going to move like Carvana in either direction, or this is going to move like Cop. where it's just not going to go fast. And 5% is a crazy move in
I mean,
one, and 20% is a normal move in the other one. So
yeah, the basics are kind of all you need. I mean, it's why you put me on the spot sometimes for insider ownership
hmm
or the float size and stuff like that, and I can tell without even looking at it, just based on the flow I'm looking at. So that's the kind of feel you get for it the more you do this, and it's not information you need to go out there and memorize, but you get the basic vocabulary and structures down, and you start to put the pieces together. Definitely helps the research side of things.
yeah, no, we rotate through those terms because the market conditions kind of dictate which ones are hot. But yeah, insider ownership, book value, float size, all that stuff. I mean, it does come
Yep.
into play, and not that they're sectors themselves, but sometimes that's what's attractive to investors. Stuff that's undervalued, book value, stuff
Yeah.
um, that's underweight or PE too, underweight via the estimates. I mean, that's what they do. These guys, if you just watch even like the regular news in the morning, you get the upgrades, the downgrades, the neutrals, the overweight. Those guys are all moving in and out of positions. So it kind of comes back to that swimming with the whales is really what you want to do, and you got to figure out what big money's buying. Because I mean, retail definitely right now is not controlling the market at all. So you do have to have a
No.
you
No.
do want to look through it through their lens, so to speak.
Yeah. Absolutely.
Getting some Spicer 586.10
So
hitting there somewhere. Oh yeah, 600.
yeah. Yeah. I mean the the flow on spies fairly fairly quiet. Zero DTE. Just moves the highest volume every single day. But when I look at some of the historical open interest, a lot of dead stuff up here for February. These were all bought long time ago. But the one thing I will say, this March 620C that's leaning bid side, I said that was kind of the lid to me on the market, and selling those off helps suppress any kind of upward movement. And then this correlates with a lot of what happens in with the futures contracts, which is a little more significant. But yeah, I'm still there. Um, the the downside, I'm still the 3 days down, 2 days up kind of guy right now. I
Sure.
still think that's where we are, but I don't think we really break any kind of new ground to the downside anytime soon without some significant news, and more than just the algos flipping to sell when Trump says tariff. I mean, it's going to take a little more than that, but yeah, I there could be moving to the lower 590s coming up, but yeah, I just think we're kind of stuck here for a bit.
Yeah, last about week and a half, we've really respected the 50 on the daily. That's kind of what's kicking in here. But consolidation for me, I still think it's what we're going to do until we get through the ER season. We're touching the 50 at some time on the weekly this
Yeah.
year. And for me, if we do get through ER season and we're still at 586.10, that shows strength for me in the market. That it made we ran for,
Hmm.
let's say, 4 or 5 months, um, consolidated while confirming expectations and continue to go on. So still think the um, B's and C's are the better plays on the year. But and like your Mag 7, S&P guys, you're going to get 10-12% this year, and you're going to bitch about it because you got 28 last year. That's just where I'm at with it.
Yeah, totally with you on that. And so something like this is one that I obviously gotten into. So I grabbed AVGO when it on this drop here, and you'll notice mid candle goes both ways. By the way, so that was a good example of that. But then I'm not really expecting much up here. I just think that like the 220 area
Yeah, that was it.
can do this 220 to 240 kind of thing. So I'm just gonna I'm just parked there. There's a price where I just get out of some of this new stuff I bought. But yeah, just planning to chill for a while, and I think that's quite a few of them are set up like that. And within tech, I always I don't like tech as a sector is pretty useless because it's so big. So that's where you talk about B's and C's. That's kind of where I look. And there's software companies getting through earnings or with earnings coming up, and a lot of opportunities there, and they can have a range of 20 to 50%, even while SPY is just stagnating. So that's definitely where my mind's at as far as that goes.
Last thing we'll say, for me at least, is you just talked about the 50% retracement right there. That's what Fibonacci's are. They're percentages. If you look at those little
Yeah.
small numbers on those people's lines, they're just percentages off the top and the bottom of a candle. I don't use them because I can do that in my head visually. So that's how basic that is to
Right.
me. Like, there's bigger stuff to look at than fib levels. I'd rather use my levels. I just wanted to get that. I had that wrote
Yeah, and I
down.
mean, in the a drop like that, I mean, it's the same with RSI. I mean,
Yeah,
I
yeah.
don't know all the math
MACD,
behind RSI, but I know
MACD, same
it
thing.
hits here, and it's in the dirt. RSI of 10 or something ridiculous. Yeah, that's gonna pop back up,
What
and
what
then
time
it's just
frame
a
are you
question
on?
of if they're qualified.
You're a day chart,
This
aren't
is
you?
daily.
Yeah, 3 day, 3 days. That's your entry.
Yeah,
I mean, that's your confirmation that third day.
yeah.
You don't buy the first red candle, second red
Hmm.
candle higher low, third one higher low. That's go, and then you're on from there. So I mean, you should have got right at 200s on this. I don't expect someone to get 195s if you're
Um,
patient.
no, no, yeah, that was I was like consolidate under 200 any kind of amount of time at all is go time, or and under under 220, you know you're good, and then we go from there. So yeah, I mean that was totally where I was at with that in my
Perfect.
notes.
So spy staying in the box. Too long didn't read.
Yeah, yeah, that's my take on it for now.
Perfect. Yeah, business as usual. Ready to get to work, P?
Yeah, let's do it.
Perfect. Like and subscribe, people. Link somewhere.